Good evening and welcome to the Shadow Trader Video Weekly for Sunday, December 9th, 2012. In last week's video, we talked about the fact that the market had already been up quite a bit and may be struggling this week to get higher. That's actually exactly what happened. The market didn't really do very much this week. Backed off a little bit and then, has been struggling to get higher since then. Gave you a couple of examples of ratio spread trades, which we'll go over in a minute, that you could have employed for some profit this week. Looks to me like the market wants to grind its way a little bit higher here. I'm focusing on the downside on these last two lows here, which I think at this point are pretty secure lows, and I'll just draw those in right here. That would be these here. You have our hammer support down to here and here. Really, this 1400 is really the key. If we lose this 1400, I think that would be kind of bearish at this point. We really want to not roll over. We kind of want to just stay strong at this point. Near-term target in the market is right here at this double top, which is just here, just between the 1430, 1440. In the S&P, and if we can get to that level, then I would not be surprised if there's a rally all the way to the declining trend line, which is currently here at 1460. So I'm definitely thinking more bullish than bearish at this point. What's acting as a drag here on the S&P is the NASDAQ, and that's mostly due to Apple. There's a huge difference in the chart you can see on the NASDAQ comp as opposed to the S&Ps. Right, you can see what a bearish day it was on Friday, moving down, a lot of relative weakness. But if you look at the Dow, that's really kind of a positive action. Notice that it's already moved up and out of the range here, that the S&P is still stuck in this range after the pullback. The Dow has already moved out. So this is common that the indices are very out of sync, and one is the catalyst that's moving, forward. Does it pull the other ones upward, or do the weak ones pull it down? I'm more in the camp now that the stronger ones, such as the Dow and the S&P, will pull the NASDAQ. A lot of the reason for the weakness in the NASDAQ has been just Apple, really. And Apple is actually coming into the possible buy point that we've been talking about for a while at the at the 460 level. And the key to this Apple trade to see where that would be to go to the longer term time frame, like the monthly. And we've been talking about this, myself and Brad, on our Tasty Trade show, and I do believe that there's going to be a very strong buying opportunity in the stock here soon. One thing that's interesting about Apple at this juncture is that last month, on the heavy selling and then subsequent reversal to the upside, we had a very bullish, bar form on the monthly chart with this long hammer to the downside. And you would think that would be very, very secure, that we would not violate that area, but there was then a huge gap down in Apple subsequently in early December, and look where we are now. We're actually very close to that level. So with this low, which is 505.75, being taken out, if it's taken out, that could happen this coming week. I believe that that's the catalyst that's going to push Apple lower and give it that one last washout of selling. And I believe that selling is going to end right here at $460 because it's a longer-term monthly trend line that's been in effect since 2009, going on almost 4 years now. All right, so that's the spot I'm going to be looking for. I will be tweeting it on my Twitter feed. My Twitter handle is at the beginning and end of this video, so I'll be talking about that area live as it happens. All right. In last week's video, I gave you a couple of good trade ideas. I said if you have a market that's already moved up quite a bit and then you think it's going to be resistant and chop around a little, one of my favorite plays to work on is ratio spread put on for a credit. And last week I specifically put on two as per my comments in last week's video. One was for a debit, one was for a credit. And as I kind of expected to happen, the one that was put on for a debit was a little bit harder to manage, and that was really the point I wanted to bring home, is that if you're going to do a 1-by-2 ratio spread, you want to try to put it on for at least a healthy credit, 50 cents to $1 or so, so that it's worth your while, even if the stock goes nowhere. The trade in Amazon was to put on a 260, 265, and I was essentially buying one 260, and selling two 265s. Max profit would have been if the stock had moved all the way to resistance here at the 265 level. And if I go back over here, I'll start with Amazon. Priceline was the other one, actually. Let me just erase this. So you can see here, these were the trades from earlier this week, as per the comments in the video. Not too big of a trade, just 5 lot on Amazon, which was a 23-cent debit. And then what I did to manage the trade was, seeing that it wasn't really going anywhere and I wasn't going to be able to sell the spread for another credit to cover what I paid, I sold half the spread later in the week. On Thursday, I sold the 260 call for an 18-cent credit. So the net effect of everything here was a 5-cent debit, essentially a 5-cent loss on the Amazon spread, and I was totally okay with that because, remember, I knew that I had the Priceline spread, which was working a little bit better, more in my favor. So I was like basically like okay with the 5-cent loss because I was putting it against the Priceline. So let's take a look at Priceline now, what the trades were there. I'll just move this over. On Priceline, I was looking at a 700-705 call, and you can see here early in the week, Monday's date here, 62-cent credit, and that then went out worthless. You can see that here going into Friday's session, I have no trades in these spreads. These spreads here are actually ones that I put on for the next week, which I'll get into in a second. But first I want to talk about the Priceline here. So the bet was that resistance would hold in the 695 area on the stock, which is right in here, and I'll show it to you clearer on a weekly. Right in here. So I thought that if price moves there and stops, we'd have opportunity for a pretty big win. If not, we keep the credit. And you can see here that all that ended up happening was that the 62-cent credit was kept. Those went out worthless. And here you can see that I've already started putting on a ratio spread for next week in Priceline, where actually instead of going 5 wide, I'm actually going 10 wide, and that would be these trades here, which are the 30 and 20-cent credits here. Now, the reason I'm getting a smaller credit here is because my short options, which are my 705s, are much further out than my 695s. I've got a 10 wide spread here, as opposed to these being only 5 wide. So I receive less of a credit. However, if the stock moves up into the desired area, I have a better chance of making money knowing that my further out short strikes are further out from the long. So that's what I'm thinking about for this week. All right. So that's basically it for this week's video. I just wanted to give you an update on those 2 trades. I continue to like the ratio spreads on the weeklies. Remember, I do have an educational article at shadowtrader.net in the blog section. Just click on the blog tab, and then on the left-hand side of your screen, you'll want to click on educational articles, and there's an article there about the ratio spreads. Again, just to recap, in the coming week, I think slowly sideways to higher. It feels to me like the Dow and S&P are going to lead, and the NASDAQ, which has been relatively weak just due to the Apple weakness, I think is going to have to get its head out of the sand and kind of follow along. So we shall see. All right. On behalf of myself and the entire Shadow Trader team here in beautiful Philadelphia, Pennsylvania, as always, I wish you good trading and good night.